This is your LMAX exchange technical update for Friday, February 17th, 2017. Euro dollar. So the euro has been doing a lot of chopping around this week. Initially, it had broken down after breaking below some key support at 106.20, looking like the market was ready to roll over and accelerate back towards the 14-year low from January at 103.41. But then the market has since bounced and is now heading higher. We've said this week, though, since the breakdown, that the market would need to establish back above 107.15 on a close basis to put the pressure back on the top side. Inability to do so will still keep the pressure on the downside. So 107.15 is going to be the key level to watch on Friday to see whether the market closes above or below. If it holds below, there's risk here for a lower top and a continuation of this downside pressure back below the weekly low, which came in around 105.22, and down towards that 14-year low from January at 103.41. Sterling dollar. So cable continues to trade sideways mostly over the past several sessions. The market still remains confined to a broader downtrend, though, and a breakdown below key support, which now comes in at 23.47, would accelerate declines back towards the major base that was seen in place in October of 2016 at 118.41. We also saw earlier this year a breakdown below 120 into the 119s. Dollar yen. So dollar yen continues to adhere to a more bearish short-term structure. Rallies have been well capped as anticipated, and there's still risk for deeper setbacks below the recent support that we saw at 11.59 and down towards a measured move objective at 109.50. At this point, again, it would take a break back above 115.62 to take the immediate pressure off the downside. Euro Swiss. Euro Swiss continues to consolidate just off the 2016 low around 106.25, but it looks like the market's getting ready for a break below that level, which would expose a deeper drop down towards psychological barriers at 105 further down. Aussie dollar. So Aussie has been very well capped into rallies on a medium-term basis up towards 78, and so while we've seen an impressive run in 2017, this rally is expected to stall out here and find very solid resistance up towards 78 again, but we would need to see a break and close back below 76 to take the pressure off the top side and confirm a shift back to the downside. Dollar CAD. So dollar CAD has been trading to the downside over the past several days, but overall the market has been very well supported around 130, and it's looking for that next higher low ahead of a fresh upside extension. A break back above recent highs that were seen on the 7th of February, which come in around 132.13, would help strengthen the constructive outlook and accelerate gains. Kiwi dollar. So Kiwi continues to show signs of a major top off the 2016 high. We recently saw the market stall out ahead of 74. At this point, this current bounce is seen as corrective, and a lower top is now sought out below 73.76 ahead of the next major downside extension towards next key medium-term support down in the 68s. SPX 500. The S&P 500 has pushed to a fresh record high this week and is showing no real signs of let up just yet. We would need to see a break back below 2300 to officially take the pressure off the top side and suggest that the market could be looking to roll over. Ultimately, though, a break below 2232, that's the low from the last day of 2016 on the 30th of December, would be required to force a shift in the structure, and so any setbacks that we see ahead of that level are expected to be supported. Again, below 2232 would be required to force a shift in the structure. Gold. So gold continues to adhere to our expectation of seeing a push towards the next key major objective at 1260. Again, the market had bounced out from 1180, breaking back above 1220 resistance, confirming a higher low at 1180 and suggesting that the market could be poised for fresh upside towards that measured move objective at 2060 over the coming sessions.